The dragon has awakened. The chess piece has been moved. And as of January 1st, 2026, the global silver market will never be the same again. What I am about to tell you is not speculation. It is not theory. It is not some abstract economic forecast that may or may not materialize in the distant future. This is happening right now. This is policy that has already been implemented. This is a strategic weapon that has already been deployed. And if you do not understand what China has just done, if you do not grasp the magnitude of this decision, you will wake up one morning wondering why the price of silver has doubled while you were sleeping. China has just applied the rare earth playbook to silver. They have taken the most strategic industrial metal on the planet and placed it under government control. They have transformed silver from a freely traded commodity into a licensed export requiring Beijing's explicit approval. And the world, from Wall Street to Mumbai to Berlin, is in absolute panic mode. Let me explain exactly what happened, because the mainstream financial media is either too incompetent or too compromised to give you the full picture. Starting January 1st, 2026, the Chinese government implemented comprehensive export licensing requirements for refined silver. This means that no company operating within Chinese borders can ship a single ounce of silver outside the country without first obtaining a government license. This is not a tariff. This is not a quota. This is direct state control over who gets silver and who does not. The Chinese Communist Party has inserted itself as the gatekeeper between one of the world's largest silver processing hubs and the rest of the global economy. They are deciding which countries get access to refined silver. They are deciding which industries get their allocation. They're deciding which companies live and which companies die. Now, some of you might be thinking that this is not a big deal. China only mines 13% of the world's silver. There are other sources. There are other countries. We can get silver from Mexico, from Peru, from Australia. And technically, you would be correct about the mining statistics. China does produce only 13% of global mine output. But here's what the statistics do not tell you. Here's the number that should send chills down your spine. China controls between 60 and 70% of global silver in terms of refinement and production. Let me say that again because it is the most important fact in this entire broadcast. China refines and processes 60 to 70% of the silver that flows through the global economy. They are not just a producer, they are the producer. They are the bottleneck. They are the choke point through which the majority of the world's silver must pass before it can be used in solar panels, in electronics, in electric vehicles, in medical devices, in military applications. This is why the rare earth comparison is so apt. This is why experts around the world are saying that silver is about to become the new rare earth. Because China pulled the exact same move with rare earth minerals a decade ago. They recognized their dominant position in the supply chain. They recognized that the world had become dependent on Chinese processing capacity, and they weaponized that dependency. They restricted exports. They created licensing requirements. They picked winners and losers based on political alignment. Countries that cooperated with Beijing got their rare earth allocations. Countries that challenged Beijing found themselves mysteriously unable to source critical materials. The price of rare earth minerals exploded. Industries were disrupted. Supply chains were broken. And China consolidated its position as the indispensable supplier. Now they are doing the exact same thing with silver. And the playbook is identical. First, they dominate the processing capacity while the rest of the world remains complacent. Then, they implement export controls that give them discretionary power over supply. Then, they use that power as leverage in trade negotiations, in diplomatic disputes, in strategic competitions. Silver is no longer just an industrial metal. Silver is now a geopolitical weapon. Silver is now a tool of statecraft. Silver is now controlled by the same government that has systematically undermined Western economies, stolen intellectual property, and positioned itself as the primary adversary of the free world. Let me walk you through the mechanics of these new regulations because the details matter. China has established specific criteria that companies must meet to obtain export licenses. Only large, government-approved enterprises are permitted to apply. These companies must demonstrate sufficient production capacity. They must have established credit lines. They must meet compliance requirements set by the Ministry of Commerce. And even if they meet all these criteria, they still require explicit government approval for each export transaction. As of today, only 44 companies have been granted permission to export silver from China. 44 companies, in a country with millions of businesses, in a nation that processes the majority of the world's silver supply. Only 44 entities are now authorized to ship that silver abroad. This concentration of export authority means that Beijing has near total control over who receives Chinese silver. They can turn the tap on or off at will. They can reward allies and punish adversaries. They can create artificial scarcity to drive up prices. They can stockpile domestically while the rest of the world scrambles. And make no mistake, the rest of the world is scrambling. The reaction from India has been particularly intense. India is one of the largest silver consumers on the planet. The Indian population has a cultural affinity for precious metals that goes back thousands of years. Silver is used in jewelry and religious ceremonies, in traditional investments, in industrial applications. India imports massive quantities of silver every single year, and a significant portion of those imports have historically come from or through China. The Indian government understands that these new Chinese regulations threaten their domestic supply. They understand that higher silver prices will impact Indian consumers and Indian industries. They understand that dependence on Chinese silver creates strategic vulnerability. The panic in New Delhi is real. The concern is justified, and there is no easy solution. The United States is equally alarmed. In November 2025, the U.S. government officially added silver to its list of critical minerals. This was not a symbolic gesture. This was a formal recognition that silver is essential for national security. Silver is used in the electrical systems of military aircraft. Silver is used in missile guidance systems. Silver is used in communication equipment. Silver is used in the solar panels that power military installations. Silver is used in the batteries that drive electric military vehicles. The Department of Defense cannot function without reliable access to silver. And now, the primary processing hub for global silver is under the direct control of America's primary geopolitical rival. Elon Musk, who is perhaps the most visible industrialist in the world, reacted immediately to the news. He posted on his own platform, X, stating that silver is needed for many industrial processes and that China's restrictions are not good. This is a man who runs Tesla, a company that uses silver in every vehicle it produces. This is a man who runs SpaceX, a company that uses silver in satellite systems and rocket components. This is a man who runs the Boring Company and Neuralink, both of which have silver requirements for their technologies. When Elon Musk takes time out of his day to publicly criticize Chinese trade policy, you know the situation is serious. You know that the industrial implications are severe. You know that the people who actually build things, the people who actually run factories, the people who actually need silver to produce their products are deeply concerned. Now let me explain why this decision will inevitably lead to higher silver prices. The mathematics are straightforward. China controls 60 to 70% of global silver refining. If they restrict exports by even 20 or 30%, the global supply drops dramatically. Meanwhile, demand is not dropping. Demand is exploding. The solar industry is consuming record amounts of silver. Every solar panel contains silver paste for its photovoltaic cells. The International Energy Agency projects that solar installations will triple by 2030. That is not a hopeful estimate. That is a baseline projection based on current policy commitments and investment trends. Each additional gigawatt of solar capacity requires approximately 30 tons of silver. If solar installations triple, silver demand from solar alone increases by tens of millions of ounces per year. Electric vehicles are another massive demand driver. Every EV uses more silver than a traditional internal combustion vehicle. The battery connections, the electrical systems, the charging infrastructure, all require silver. China is the world's largest EV manufacturer. They produce more electric vehicles than the rest of the world combined, and they are keeping that silver for themselves. They are prioritizing domestic consumption over exports. They are ensuring that their own EV industry has the silver it needs, while competitors in Europe, America, and Asia struggle to source material. Electronics manufacturing follows the same pattern. China dominates global electronics production. Smartphones, computers, servers, data centers all contain silver. The AI revolution is driving unprecedented demand for computing infrastructure. Every AI query, every machine learning model, every autonomous vehicle decision runs on hardware that contains silver. The data center build-out is just beginning. The demand for silver in electronics is accelerating, and China is positioning itself to capture the lion's share of that silver for its own industries. This is the strategic logic behind Beijing's decision. They are not restricting silver exports because they want to hurt the rest of the world. They are restricting silver exports because they want to help themselves. They recognize that silver is essential for the industries of the future. They recognize that controlling silver means controlling the pace of technological development. They recognize that nations that cannot access silver cannot build solar panels, cannot manufacture EVs, cannot produce electronics at competitive prices. By locking up the silver supply, China is locking in its competitive advantage. They are ensuring that Chinese solar panels will be cheaper than American solar panels. They are ensuring that Chinese EVs will be more available than European EVs. They are ensuring that Chinese electronics will dominate global markets because Chinese factories have the silver they need, while foreign factories do not. Let me talk about what this means for the price, because this is what most of you care about most directly. Silver prices are already near record highs. The metal rose over 148% in 2025, marking its best annual performance since 1979. It outperformed every major stock index. It outperformed the technology sector. It outperformed real estate. It outperformed bonds. Silver was the investment of the year, and most people completely missed it. But here is the critical insight. That rally happened before the Chinese export controls went into effect. That rally happened when the global supply chain was still functioning normally. That rally happened when refined silver could flow freely from Chinese processors to global markets. Starting now, that flow is restricted. Starting now, the supply is constrained. Starting now, the dynamics have fundamentally shifted in favor of higher prices. Experts across the financial industry are now saying that silver will hardly become cheaper from here. That is not a prediction of modest gains. That is a statement that the floor has been raised permanently. The days of cheap silver are over. The days of taking silver supply for granted are over. The days of assuming that the market will always provide are over. China has changed the rules of the game. And in this new game, silver is scarce, silver is strategic, and silver is expensive. Let me give you the technical analysis because the charts are confirming what the fundamentals are screaming. Silver is currently trading in the mid-$70 range after touching an all-time high above $83 earlier this year. The pullback from those highs was normal consolidation after a parabolic move. The market needed to digest the gains. Weak hands needed to be shaken out. The algorithms needed to reset. But the pullback is over. The consolidation is complete. And the next leg higher is about to begin. The key support level is around $70. This is a psychological round number that has attracted buyers on every test. Below that, the $65 level represents the 50-day moving average and a significant Fibonacci retracement. These levels are likely to hold because the fundamental picture has improved dramatically since the Chinese announcement. The buyers who are stepping in at these levels understand what is happening. They understand that the supply is constrained. They understand that the demand is insatiable. They understand that higher prices are inevitable. On the resistance side, the immediate target is $75, which represents a key consolidation zone from recent trading. A break above 75 with strong volume opens the path to $80. A break above $80 puts the all-time high of $83 back in play. And if we exceed that all-time high, we enter uncharted territory. There's no historical resistance above $83. The price can run as high as the supply constraints dictate. Triple-digit silver, $100 per ounce or more, is very much on the table if the Chinese restrictions remain in place and demand continues to grow. Now let me address the question that is on everyone's mind. What can the rest of the world do about this? What options do the United States, India, Europe, and other major silver consumers have? The honest answer is that there are no good short-term options. Silver processing capacity takes years to build. New mines take a decade to develop from discovery to production. Alternative suppliers cannot ramp up overnight. The world has allowed itself to become dependent on Chinese processing, and unwinding that dependency is a multi-year project. In the medium term, we will see efforts to diversify supply chains. The United States will invest in domestic refining capacity. India will seek to build its own processing facilities. European nations will look to source silver from South American mines that bypass Chinese refiners. But these efforts will take time. They will require massive capital investment. They will face regulatory hurdles and environmental opposition. And in the meantime, China maintains its stranglehold on the market. There is one option that is available immediately, and it is the option that sophisticated investors are already exercising. That option is to accumulate physical silver before the supply constraints fully materialize. The market has not yet fully priced in the implications of the Chinese export controls. The mainstream financial media has barely covered the story. The average investor has no idea what has just happened. This creates an asymmetric opportunity for those who understand. You can buy silver today at prices that do not reflect the new supply reality. You can position yourself ahead of the inevitable repricing. You can protect your wealth with an asset that is about to become significantly more valuable. Let me talk about the domestic Chinese dynamics because understanding Beijing's motivation is essential to predicting their future actions. China is not just restricting silver exports to harm the West. They are restricting silver exports because they need the silver themselves. China is the world's largest manufacturer of solar panels. They produce over 80% of the global supply. Each solar panel requires silver paste. As the world transitions to renewable energy, as solar installations multiply, China's domestic silver demand is exploding. They need to prioritize their own industries. They need to ensure that Chinese solar manufacturers have access to the silver they need. Restricting exports is the logical response. The same logic applies to electric vehicles. China produces more EVs than any other country. Their domestic market is massive and growing. Every EV requires silver. By keeping silver at home, China ensures that its EV industry can continue to grow without supply constraints. They are building the industries of the future, and they are securing the raw materials to power those industries. Electronics manufacturing follows the same pattern. China dominates global electronics production. They produce the phones, the computers, the servers, the data center equipment that powers the global digital economy. All of this requires silver. By restricting exports, China ensures that its electronics industry has first claim on available supply. This domestic demand creates a structural floor under silver prices. Even if global demand were to decline, Chinese domestic demand would absorb the available supply. But global demand is not declining. Global demand is increasing. Solar installations are expanding. EV adoption is accelerating. Electronics manufacturing is growing. AI is creating unprecedented demand for computing infrastructure. Every trend points toward higher silver consumption, and every trend points toward higher silver prices. Let me now address the geopolitical implications, because this is not just about economics. This is about power. China has demonstrated repeatedly that it is willing to use economic leverage for political purposes. They restricted rare earth exports to Japan during a territorial dispute. They imposed trade sanctions on Australia after political disagreements. They have threatened Taiwan with economic isolation. Silver is now another tool in their arsenal. They can use silver access to reward countries that align with Beijing. They can use silver restrictions to punish countries that challenge Chinese interests. They can demand concessions in trade negotiations by threatening silver supply. This is resource diplomacy. This is economic warfare. This is the weaponization of commodity supply chains. The United States is particularly vulnerable. America has outsourced much of its manufacturing capacity to China over the past 30 years. America has allowed its industrial base to atrophy. America has become dependent on foreign suppliers for critical materials, and now those foreign suppliers are under the control of a hostile government. The silver restrictions are a wake-up call. They are a reminder that strategic independence requires domestic production capacity. They are a signal that the era of globalized supply chains may be ending. Nations that cannot produce or process critical materials domestically are at the mercy of those that can. And right now, China can. America cannot. Let me leave you with the investment implications, because ultimately that is why you are here. You want to know what to do with this information. You want to know how to protect your wealth and profit from what is coming. The answer is simple. Own physical silver. Own silver miners. Own exposure to the precious metals complex. The supply is constrained. The demand is growing. The price is going higher. There's no scenario in which the Chinese export controls lead to lower silver prices. There's no scenario in which the rare earth playbook fails when applied to silver. Every historical precedent, every economic model, every fundamental analysis points in the same direction. Higher prices, significantly higher prices, potentially much higher prices than anyone currently expects. If you already own silver, hold it. Do not sell. The gains you have seen so far are just the beginning. The Chinese restrictions will take months to fully impact the market. The repricing will be gradual at first, then sudden. The weak hands will sell during the volatility. The strong hands will accumulate. Be a strong hand. Be the buyer when others are selling. Be the holder when others are panicking. If you do not own silver, start accumulating immediately. Do not wait for a dip that may never come. Do not wait for confirmation that the price is rising. By the time the mainstream media covers this story, by the time the average investor understands what is happening, the price will already be significantly higher. The smart money is buying now. The informed money is accumulating now. The money that understands geopolitics, supply chains, and strategic commodities is positioning now. Join them. The days ahead will test your conviction. There will be volatility. There will be pullbacks. There will be days when the price drops and the headlines scream that silver is crashing. Ignore the noise. Trust the fundamentals. China has just applied the rare earth playbook to silver. They control 60 to 70% of global processing. They are restricting exports to 44 licensed companies. They are prioritizing domestic consumption over foreign customers. The supply is constrained. The price must rise. It is mathematical certainty. Silver has become the new rare earth. The strategic metal has become a strategic weapon. And if you're not positioned for what is coming, you will be left behind. The dragon has made its move. The question is whether you will make yours. Hold the line. Accumulate on weakness. And never ever sell your physical for their paper. This is the moment we have been preparing for. The supply is locked, the demand is exploding, and the price is about to reflect reality. See you on the other side.